Welcome to the our last series of the related party transaction webinar. And today's last topic is conceptualization of RPT and reporting. And today we have with us for presentation, we have Miss Vallari Gupte with us. It's okay now?
Yeah, it is better now.
It's fine.
Yeah. And we have with us Ms. Vallari Gupte. And I think Vallari is second or third time is coming, and we are loved, Vallari, your contribution. Thanks for your time. Always you are there with us. Thanks a lot for that.
Thank you.
Vallari, so just to formally introduce Vallari, of course, he has been there with us many times. Vallari Gupte is a commerce and law graduate from University of Pune, from Chartered Governance Institute, UK. Currently, she is working as a General Manager, Company Secretary and Compliance Officer at CEAT Limited, at RPG Group Company listed in the A Group Securities on NSE BSE. She is a member of the ESG Council and Sustainability Task Force of CEAT, responsible for the integrated reporting, and also led the Center of Excellence for Legal and Secretarial Functions of RPG Group companies. With total post-qualification experience of around 20 years, she has worked in the corporate secretarial and legal functions of various multinational companies and listed entities like Bajaj Holdings, WNS Global Service, Tech Mahindra, KPIT Technologies, and Thermex. She has been actively associated with ICICI. She was invited as a panelist for the subject of ESG at the 50th Golden Jubilee National Convention of ICICI 2022. She was previously a member of chairperson of Samhita Subcommittee of Pune chapter, speaker on various topics and faculty member. And she has been recognized as a successful company secretary under 40 under the Empowered Women Drive of ICICI on the occasion of Women's Day in the year 2020. She is passionate about altruistic pursuit in association with several non-profit organizations. And welcome, Vallari. Thanks for your time.
Thank you.
As usual.
Thank you. Thank you for inviting me.
Thanks. It's our opportunity and pleasure. I'll request Sudhakar to brief on the last webinars we had on the topic. So summarize that. Then Mr. Bala will say 1 minute on the topic. And then Vallari, you can say 1 minute on the topic, and then we can start the presentation. So over to Sudhakar.
Yeah, I think I suggest Bala, you go first and then Vallari, and then I will make that presentation because that might take about 10-15 minutes. So okay, you may start with.
Okay. Good morning to all of you. I have a very great pleasure in welcoming you all on behalf of Mehta Mehta and also on my own behalf. As you have been witnessing that we have been continuously carrying series of programs on the related party transaction, which is a very, very important topics. And as Dipti puts it, Mr. Sudhakar will be actually summarizing the last 4 webinars what we had, starting from the concept and the various definitions, the transactions and the related procedure, and also the approval mechanism, etc., what we have discussed in the last 4 webinars. And today, basically, what we are going to talk about it, disclosure part of it, that's what we are going to talk about it, because when it comes to disclosure, you also might be remembering, there are 2 aspects. So one is actually what is the approval, second is actually the disclosure. And when we are talking about the accounting standard per se talks about the applicability to the accounting standard, the required disclosure which are to be made in the financial statements, and every company is required to follow the accounting standard which are actually mandatory applicable to them. Whether it is Ind AS 24 or AS 24 or whatever it is applicable according to the companies and its nature and industry. And there will be certain things which will be silent, that will be not requiring the approval, etc., either under LODR regulations or under Companies Act, but nevertheless, accounting standards wants them, the disclosure will be there. So there should not be any confusion between these 2. where it is accounting standard required the disclosure has to feature in financial statements. And also according to the Companies Act, wherever the disclosure is required, such as, board report, etc., those disclosure will also be required irrespective of approval or otherwise. Approval procedure, of course, is we have discussed in the last webinar elaborately. And as you know, that the various approval procedure under the Companies Act as well as the LODR regulation, which are actually required. LODR has been undergoing a change quite often. In fact, you all will be remembering the journey with the LODR actually taken place. Drishti is going to take us through the reporting timeline, keep on changing it according to the convenience to suit the people. Because initially it was a month, then it was changed to 15 days, then it was actually the day of the publication, etc. Those sort of the changes which has actually taken place. And then there will be certain nitty-gritties. If the transaction is not there, whether it is to be disclosed, if the transaction is there, it is to be disclosed, whether KMP will be disclosed or not to be disclosed, whether dividend is the related party transaction, all these questions might come actually. I think Drishti is appropriately dealing on this aspect. Today, we will get to know more about the disclosure under the LODR regulation, Companies Act, and as well as the accounting standards, and as well as what is recorded in the board report. That is what she is going to take us through. I think I'll ask Vallari to share her thoughts initially, and then Sudhakar will actually take us the summary of last 4 seminars. We can proceed with that. Over to Vallari, please.
Thank you, sir, and good morning, everyone, once again. I think Bala sir has articulated it very well. So I'll only add that working from the corporate side and when we have to make these disclosures, essentially what kind of challenges we have or what kind of maker-checker process or additional pointers that we have to keep in mind. I think we will have a good discussion on these points today. Really great to have this kind of series where there is a detailed elaborative discussion on theoretical aspects as well as the practical issues which we have to deal with and comply. So great to have been part of this series, and thanks for this opportunity. I'm sure my colleague Drishti, she will be capturing all these aspects about disclosure of RPT along with Sudhakar sir, who will be capturing the overall aspects of RPT, which we have covered in the previous webinars. So over to you, Sudhakar sir, and I think we'll have a very fruitful discussion today. Thank you.
Thank you, Vallari. Good morning, all the participants. In fact, happy to note that we have reached the last webinar of this RPT series, and we could successfully completed that 5 series webinar on the related party transaction. As far as the importance of this topic is concerned, I don't need to say anything further because for the last 4 webinars, we are emphasizing the importance of the topic. And the way the kind of feedback what we have received on this particular webinar series is really giving us a lot of encouragement and also happiness that we could do to the fraternity. And because of that appreciation, what we are receiving is really commendable. So what I thought was that today is the last, in fact, in the series is that about the reporting and filings. And before that, I thought why not in case any one of you are attending for the first time or for the sake of continuity also, just to 10 to 15 minutes time, I thought I will summarize in the discussions what have taken place in the previous 4 webinars, so that the connectivity will be there and the Drishti can take after that or not. So I have a small presentation. Let me share that with you. In fact, somebody, when I was delivering the lecture on RPT, I have given an anecdote connecting Bhagavad Gita to related party transactions. One of the participants who was there at Hyderabad chapter at that point of time, he asked me that why I have not referred to that anecdote in this particular webinar series, and rather he has requested me that it will be beneficial to the people, and rather it will also be, people will be happy to note that what is the connect between Bhagavad Gita and related party transactions. The anecdote goes like this. One grandfather and grandson, they were staying together, and the grandfather was in the coal business, So every day he was teaching Bhagavad Gita shlokas to the grandson, who was about 8-9-year-old boy. He was not able to understand anything. He was not able to recite it properly, but grandfather was insisting that he should recite the shlokas every day virtually. And after some time, the boy got quite cheesed off, and he told his grandfather that when I'm not able to understand anything, why you are pressurizing me to read and to recite these shlokas again and again every day? So what the grandfather did was he gave one bamboo basket, in the normally whenever we have to lift the coal, we have the weather basket, that bamboo basket, which is full of holes. But in that, normally the coal is transported from one place to another place. So he has given that, and he asked him to fetch the water from a nearby pond. The boy, for a moment, he thought, how can I bring the water in this particular basket? But still the grandfather insisted. So he went to the river, to the pond, tried to bring the water. Obviously, by the time he reached his grandfather, the entire water has flown out of that holes. This happened for quite some time. Every day for about 3-4 days, the grandfather was insisting, the boy was doing it. And on the last day, about the 5th day or so, the boy got so tired. And he said, either you are mad or I am mad. I can't put any further efforts in bringing the water with this bamboo basket. What is the essence? Why you are asking me, why you are pressurizing me to bring the water like this? The grandfather told him, I know that you are not able to, or rather you couldn't bring water, but have you seen that basket? Earlier it was completely blackened because of that coal transportation, but now because of the last 5 days when you were trying to bring the water, that whether the bamboo lost its complete coal dust, and now it has come into white color completely. So that may same as the case with Bhagavad Gita also. When you are go on reciting the shlokas, though the first day, second day, third day, fourth day, you may not be able to understand, but one day will come, definitely you will understand and appreciate Bhagavad Gita. So what is the connect between RPT and Bhagavad Gita? RPT is also not less than a Bhagavad Gita. If you read first time, you may not be able to understand. Second time, you may not be able to understand. Third time, you may not be able to understand. But at the end of the day, you appreciate what exactly it is there. If you see the regulation 23, it is exactly like that. When the amendments came, in fact, we couldn't understand it, damn anything about it. So many representations have given, so many what's called as submissions have been made to SEBI, but nothing could succeed. So ultimately what happened was, at the end of the day, we could reconcile, we could understand the provisions, and we could implement the provisions. And we are also able to file the reportings and all whatever it is required. So a wise man said that the more you know, the more you realize.
So your voice is...
So a wise man said that the more you know, the more you realize that you know nothing. This, to a large extent, it seems to be that it is correct with the RPT also. Earlier, I told you that when we were working on the revision of the RPT guidance note, certain basic things, what, in fact, which was there in section 188. Hello. So certain basic.
You go ahead.
Yeah, sorry.
You go ahead.
Thanks, Dipti. So certain basic things of section 188, after the implementation of 5-6 years, still there was a lot of scope for interpretation, lot of scope for understanding. So that's why sometimes it may so happen, the more you take a deep dive into the subject, and I used to say earlier, for significant beneficial ownership, section 90, it was the same case. The more you try to understand, the more the clarity was not there, or the more questions used to come in your mind. And same is the case with related party transactions also. If you are just scratching the surface, it will not do. You have to take a deep dive into the subject. This is what exactly we have done in the past 4 webinars. So again, to understand the fundamental of the related party transaction, to appreciate the difference between section 177 and 188, you have to understand that every transaction with a related party, may not be a related party transaction, but every related party transaction is necessarily a transaction with a related party. Every transaction with a related party may not be a related party transaction means every transaction with a related party does not require compliances under section 188. But every related party transaction, that means those transactions which are mentioned in section 188 are necessarily transactions with a related party, and certainly they require compliance with 177. That means each and every transaction with related party require compliances with section 177 means prior approval of the audit committee is required, both under the Companies Act as well as under the listing regulations. And as far as the related party transactions are concerned, that means those transactions which have been prescribed, depicted under section 188, they require different set of compliances. So the transactions with related parties, as we discussed earlier, need not always be disadvantageous to the parties concerned. But the only concern is when they are abused. So hence transparency is essential and crucial. And certainly the focus of the proxy advisories, the focus of the regulators, and the focus of all the stakeholders like your auditors, your bankers, your shareholders, everybody will be seeing this related party transactions as well as the disclosures what we are given in the annual reports with a microscopic view. That's why transparency and fairness is the essential and crucial requirements. Similarly, when the regulator comes, God forbids, for any inspection or investigation, certainly the focus will be more on the related party transactions. That's why it is always advisable to maintain impeccable records as far as the related party transactions are concerned. The supporting papers, the backup papers should, because the moment you start putting questions, if you start fumbling, means that the message what you are giving is entirely different. Whether your regulators or whether your auditors or your proxy advisories, whoever comes, if you are able to establish that there is a proper system of complying with related party transactions, and there is a proper system of reporting, and there is a proper system of controlling the related party transactions or complying with the requirements. Obviously, as far as the compliances are concerned, we have to comply. If your company is a private limited company or unlisted company, you have to comply only with the provisions of Companies Act 2013. Apart from that, if your company is listed company, you have to comply with the provisions of Companies Act as well as of the listing regulations. And of course, as far as the disclosures are concerned, all the companies have to comply with the accounting standards. Please note that even if your company is a private limited company or a listed company, the compliances under the Companies Act are the same. Now, how to comply with RPT transactions? We have learned that first and foremost thing is that we have to identify the party with whom your company is entering into a transaction. Is it a related party? And we have seen that the related party definition is given under section 2, subsection 76 of the Companies Act, as well as rule 21ZB of listing regulations, if your company is a listed company. Absolutely, there is no changes as far as your section 2, subsection 76 are concerned. But there are major changes have come effective 1st April 2022 as far as listing regulations are concerned. Once you have determined that the party with whom you are entering into the transaction is your related party, then you have to see that whether the transaction is a related party transaction or not. Related party transaction means under section 188 subsection 1, there are about 6 to 7 type of transactions are there. If those transactions, then you have to ensure the compliances with section 188 also. At the same point of time, there is a major exemption has been available that if the transactions what you are entering into, if they are in the ordinary course of business at an arm's length, then section 188 is not applicable. Whether that company is a listed company or an unlisted company, the exemption is available. People have sometimes a wrong notion that if my company is a listed company, I have no benefit of this exemption. The benefit of exemption was there earlier, but now because of that threshold limits changes as far as material related party transactions are concerned, major change is not there now. we have seen that definition of related party, major change what has come in that Rule 21 ZB is effective 1st April 2022. Every promoter and promoter group companies or related parties, irrespective of their shareholding, whether they are holding shares or not, all are related parties, because prior to this amendment, that 20% holding by the promoter entity was required. Now that is removed. So whether you hold the shares or not, it is immaterial. If you are a part of promoter or promoter group, as per the disclosures given to the stock exchanges, you are a related party. Second, any person or any entity holding equity shares of 20% or more up to 31st March 2023 and 10% thereof in the listed entity, either directly or on a beneficial interest basis, wherein you have filed the Section 89 disclosures. During the immediate preceding financial year, this aspect we have at a great length, we have discussed it, how to monitor, how to, ensure that compliances and all those things. If any of you have missed out that particular thing, please refer to the previous 4 webinars which are available on YouTube and as well as on our website. The link is also given. You may kindly go through that. So this is the major change which has come as far as the related party definition is concerned. Now we have discussed some key terminology also, because when you are complying with the related party transaction, there is certain terminology which is very, very important, like what is goods, what is a service, what is an office of place of profit. That is also we have discussed very extensively. What is an ordinary course of business and how to determine the ordinary course of business and who will determine the ordinary course of business. This also we have discussed it. What is arm's length transaction and how the methods of arm's length to determine the same. This also we have discussed. Now, related party transaction under Rule 21 ZC, this also has undergone a major change. Effective 1st April 2022, even the subsidiary companies of the listed entities have also been roped in, and some compliances are to be ensured by the listed entity. The definition of related party transaction has undergone a change, which says that if a transaction involving a transfer of resources, services, or obligations between the listed entity or any of its subsidiaries on one hand, and related party of the listed entity or any of its subsidiaries on the other hand, or a listed entity or any of its subsidiaries on one hand, and any other person or entity on the other hand, the purpose and effect of which to be benefit the related party of the listed entity or any of its subsidiaries. This particular amendment is coming from effective 1st April 2023. So the first part, that means listed entity and subsidiaries on one side and their related parties on the other side. This has already came into force from 1st April 2022. And this is the first financial year is closed. I am sure that every one of us have ensured the necessary compliances, because sometimes you have to also seek the approval of the for the transactions of the subsidiaries. Also, you have to seek the approval of the audit committee of the listed entity. And the second part is very crucial, that if a listed entity or any of its subsidiaries are entering into a transaction with an unrelated party, but the purpose and effect of which is going to give a benefit to the related party of the listed entity or if its subsidiary, even that also is a related party transaction. This also we have very extensively discussed in the last webinar, regardless of whether a price is charged or not. So just to recap that, the purpose and effect from 1st April 2023, that means this financial year, the following transactions are also fall in the related party transaction. That is the transaction between listed entity and any other person entity, the purpose and effect of which is to benefit a related party of the listed entity or its subsidiary. Transaction between the subsidiary and any of the person entity, purpose and effect of which is to benefit a related party of the listed entity or its subsidiary. So this is nothing but indirect related party transactions. How a company secretary or how a CFO or how a CEO or anyone how to comply with this, how to identify the purpose and effect of the transactions. All these things we have discussed. Another thing is that there is also this definition of material related party transaction have also undergone a change. Effective 1st April 2022, a transaction with related party shall be considered material if the transaction to be entered into individually or taken together with the previous transactions during the financial year, if it exceeds rupees 1,000 crore or 10% of the annual consolidated turnover of the listed entity as per the last audited financial statements of the listed entity, whichever is lower. Unfortunately, the last three what's called words, whichever is lower, has put the companies into great difficulties because 1,000 crore is the minimum limit now before going to the shareholders. So in fact, lot of times the companies have to go to the shareholders to seek their approval because prior approval of the shareholders is required. That approval you may take it in a EGM or by way of a postal ballot, but proper planning is required, and the company secretaries as well as the CFOs have to act proactively to estimate all the transactions which are going to be material related party transactions. Because when you are dealing with a related party, whether the listed entity is dealing or the subsidiaries are dealing with that particular related party, that all the transactions are to be combined to arrive at the material related party threshold limit. Approval mechanism, we have already discussed in the last webinar. This is exactly what we have discussed. Under section 188, you require approval of the board of directors, applicable to both public and private companies. Also, when you cross the threshold limits under Rule 15, you have to go to the shareholders. Every transaction with a related party requires the approval of the audit committee, and audit committees are empowered to give such approvals on omnibus basis for the regular and routine and repeated transactions are concerned, which are not one-off transactions can't be given on the omnibus basis. We have also discussed that the approval to be given by the board, it should be at the board meeting by way of a resolution. That means it cannot be passed by way of a circular resolution. However, that restriction is not there as far as your audit committee is concerned. Audit committee can give its approvals by way of circular resolutions, but it is not at all advisable because governance point of view, especially in case of omnibus approval, the audit committee have to examine the transactions before giving its approval. Regulation 23, another major amendment was only the independent directors who are members of the audit committee have to approve the related party transactions. There is a material modification. Another new concept has come. That means shareholders, when they have given the approval to any transactions, unless there is a material modification, the transaction will continue to operate. And what is a material modification? It is not defined in the listing regulations. That has been left to the companies to determine what is going to be a material modification. So it is the revised clause is under all related party transactions, and subsequent material modifications shall require prior approval of the audit committee of the listed entity. So audit committee of a listed entity shall define what is a material modification, and effective January 1st, 2022, as I already told you, only the independent directors who are members of the audit committee have to give their approval. Now, this thing is the disclosures and reporting. This is where Drishti is going to come here now, and she will give as far as the disclosures and reporting is concerned. I'm sure that especially in case of regulation 23.9, a lot of changes have come. There were several FAQs by both NSE as well as BSE. And similarly, several times the question comes that when under the ordinary course of business and arm's length transactions are exempted under 198, whether the transactions are to be reported under section 189 in that register, or they are also exempted. There are certain ticklish. Similarly, AOC 2 is concerned. There are again, the materiality is not defined under the Companies Act. How to arrive at the materiality, that also is always a question mark. So there are certain intricacies, certain nuances are there, which Drishti is going to explain to us and educate us on this particular part. Drishti, I'm handing over to you. Thank you.
Thank you, sir. Good morning, everyone. Thank you all for giving us this opportunity to present before you all the reporting aspect of the related party transaction. So I'll quickly share my screen. So Sudhakar sir has already made our work a bit easier by summarizing what all we have discussed in past few webinars and all. So now today we are going to be discussing about the reporting aspect of the related party transaction. As we all know that disclosures under related party transactions are governed under Companies Act as well as under LODR regulations. Where under Companies Act, the disclosures are required to be given under annual basis. Under LODR regulation, they are required to be given in half yearly manner. And so before going to Companies Act, we will be seeing LODR regulation. So reporting under LODR regulation is governed by Regulation 23 Sub-Regulation 9. We have reproduced here the regulation itself, which we will be explaining in the upcoming slide in pictorial manner. So all the listed entities as well as high value debt securities are required to submit related party transaction disclosure to the exchanges, as well as the same document is required to be published on the company's website every 6 months on date of publication of the financial result. Now, this is something that has gone a major change. There has been a big journey on submission of these disclosure with the exchanges, because if we see prior to April 1, 2022, the related party disclosures were required to be submitted within 30 days from declaration of result, and there was no particular format in which these disclosures are required to be given. So the accounts team and the secretarial team had good amount of time even after the declaration of results to discuss and fill the document and submit with the exchanges. Then SEBI came with a notification dated November 9, 2021, and they said that with effect from April 1, 2022, these disclosures are required to be submitted within 15 days from date of publication of the financial result in a format that is prescribed by SEBI. Now, when this notification was brought into force, this particular format was not disclosed by SEBI. This format was disclosed by SEBI by their circular dated November 22, 2021. They had prescribed the format and they said within 15 days, you have to submit this disclosure. Now, again, the accounts team and the secretarial team had good amount of time after the declaration of result to fill the XBRL file and submit with the exchanges. In this said notification itself, SEBI said that, okay, we are giving you this time 15 days only for this 1 year. From April 1, 2023, that is to say from last to 20 days, all the disclosure, RPT disclosures on half-yearly basis are required to be submitted on date of publication of your financial result. Now, this is a major change, not just for us, but for the accounts team itself, because we have to keep them updated, keep them informed that, hey, this is something that is to be done on the date of board meeting. Now, with so many filing that are required to be made to exchanges on the date of board meeting, for example, now we have to submit the outcome not in just PDF format, in XBRL format also. So already we are doing 2 filing. After that, we have to submit standalone and consolidated results also in XBRL mode. Now, this is another filing that is required to be done in XBRL format. So this is something that everyone should not just be aware for their secretarial team, but they should keep the accounts team, the head of finance also informed that this is something which is required on priority, and all the actions are required to be taken well in advance. So in our case, we make sure that we share the XBRL format with our accounts team well in advance, and we get the updated data well before the audit committee meeting. Now, this was all about submission of the disclosure, but we saw that SEBI has also prescribed a format in which this particular disclosure is required to be made, which is coming from SEBI circular. Now, this has always been a talk of the town because this format is very detailed in nature. So we can go column by column and understand that what are the data that is required to be filled and what are the challenges we face while filling the data. The first column seems pretty simple. It just seems pretty simple because if you see, you have to mention details of party, listed entity and subsidiary entering into the transaction. Now with 1st April 2023, as Sudhakar sir mentioned, that Regulation 2 Sub-Regulation 7.3 has been amended and the definition of related party transaction has increased. The gambit of related party transaction has increased to a large extent. Earlier, the related party transaction was only between listed company and its related party and related party of its subsidiary. But now we have to also include unrelated party or entities providing benefit not just to related party of listed entity, but related party of subsidiary also. So this is something which you as a company would be doing for a good amount of time, but this is something very new for your subsidiaries also, you know, which are not listed, which who are not aware about the LODR regulation. So it is very, very important to do lot of sensitization program for accounts team of your subsidiary or anyone who is handling these transactions, because you don't want to end up in a situation where at the time of filing you're getting to know, or when you're presenting the disclosure to the audit committee, that oh, there are certain transactions which your subsidiary already did without keeping you informed. So it is very important to conduct a lot of sensitization for all your subsidiaries. If we look, go back again to the format, the next column talks about details of the counterparty. Now, details of counterparty, as we already said, the definition of related party transaction has increased. So these details are also something which are to be looked upon very, very meticulously. Name and PAN is something which is normal. But if this is an XBRL format, we all know that in case we don't have PAN, there are certain characters which are to be mentioned in XBRL format, and we can mention those. Now coming to relationship of counterparty with listed entity. Now this is also something which is to be looked at very carefully, because if you are reporting something, you have to make sure that your accounts team is making the reporting in the similar format, because it should not be like you are reporting on half-yearly basis some data, and when they are preparing the annual financials, they put some other details in the notes to the accounts. So this is also something which needs to be very deeply aligned with your accounts team and your finance team. Now coming to the type of related party we discussed. The next column is value of related party transaction as approved by audit committee, and the value of transaction reporting period. Now it does happen that sometimes you need to take omnibus approval for 1 year, and while taking that omnibus approval, you mentioned some figure. For example, you mentioned that okay, we are gonna be having transaction with XYZ Limited of 100 crore during 1 year, but when you are reporting for September quarter, the value of transaction that happened during 6 months is only 50 crore. So you have to very clearly mention that, okay, we took approval of 100 crore, but the transaction that happened was only for 50 crore. This is also something which is to be, you know, reconfirmed with your accounts team and while reporting to the audit committee as well. Now coming to the type of RPT transaction. Now in the XBRL format, if you look at the format of type of related party transaction, they have given a drop down, and in that particular drop down you can only select these items. So while selecting these items, you have to be very careful that you select the correct item, because it cannot happen that you are reporting something and something else is going in your notes to your financial accounts. Now, while you're selecting the related party transaction, there are some notes that are given by SEBI in that particular circular, which are to be kept in mind, which are You cannot club any of the transaction. There is no netting of allowed while reporting the transaction. And for every transaction, you need to give a separate disclosure. Now, to simplify this, we have jotted down some examples over here. For example, my entity is selling some or the other product to my related party in month of January, and they also gave some or the other kind of loan or advances to my related party. Now you can say that, okay, the money is flowing from my bank account to my subsidiary bank account, so I can club it and I can put it under the tab any other transaction. No, that is completely not allowed. You have to make a clear separate disclosure for all the transaction that you are doing. There could be another example where your entity is purchasing from related party in month of November, say for 100 crore, and they are selling some or the other product or services in same month for say 120 crore. So you cannot say that, okay, I'll make entry for only 20 crore under any other transaction. No, that is completely not allowed. You cannot net off any of the transaction. There could be other transaction in which your entity is purchasing some or the other products or services from the related party in month of January, say for 100 crores. Again, in month of December, they are purchasing some or the other product in December, say for 100 crores again. So in this case, you can make a single entry of 200 crore, but you have to make sure that the purchase is for same product. It cannot be like you're purchasing product A in month of November, you're purchasing product B in month of December, and you're clubbing. Because while taking omnibus approval from audit committee, you must have clearly laid down the terms and conditions for entering into transaction for this particular product. And it cannot happen that the terms and conditions for both the purchase would be same. So that is why you have to be very careful while dealing this. We are again and again saying that you need to sensitize your accounts team, you need to sensitize your accounts team, you need to sensitize subsidiaries accounts team and all, because the maximum effort that you can put here is while reporting. You cannot go and make the entry while in books of accounts, and you cannot have a tap on each and every entry that has been happening in your books, in your subsidiaries book. So this is why we always focus on, explaining, conducting lots and lots of session for your accounts team or for your subsidiaries accounts team, because they are the one who are actually entering into transaction. They are the one who knows the nitty-gritties of the transaction. They are the one who knows, okay, if I'm buying a product from my listed entity at 100 crore, what is the market price that is applicable for my other company. So that is why sensitization is something which you need to focus upon while reporting under related party transaction.
So Drishti, one question that just go back to the previous slide. So as you were mentioning that no clubbing of transactions, no netting of transactions. Clubbing of transaction means you cannot club sale, purchase, lending, borrowing, and all those things. They have to be reported separately. Netting of transactions means if I am selling as well as buying also, I cannot net off the transactions. I have to report the transactions separately. Please clarify for the benefit of the participants that suppose there are two scenarios are there. One is that there is a company listed entity is A and its subsidiary is B, and they are both have, that there is one related party which is Z. Z is that both listed entity as well as its subsidiary, both are dealing with the related party. Both are purchasing items from the related party. Now, can they club the entire purchase transactions and then put it as purchases from so and so related party? Or subsidiary have to show the purchases separate, subsidiary purchases to be shown separately and listed entities purchases to be shown separately. Please clarify that.
So all the transactions that are happening are to be disclosed separately. You cannot club them. Because while taking approval from audit committee, you must have separately asked them that, okay, I am going to enter into transaction with this entity for this particular amount based on these terms and conditions. So please provide me approval for that particular amount. For your subsidiary, you must have entered into a separate approval item. So for that, you cannot club them or you cannot net them off.
So that means even if the related party is the same, but when I as a listed entity is dealing with the related party and when my subsidiary is dealing with the related party, the reportings are to be made separately. Am I correct?
Yes, yes, yes.
Right. And same is the case with lending as well as borrowings or investments, whatever it is also.
Correct. But I'll quickly go back to one of the note over here, and I would like to have your view on this. So in note number 3, if you can see, they are mentioning that listed banks shall not be required to provide disclosures with respect to related party transaction involving loans, intercorporate deposit, advance or investment made or given by listed bank. So
Correct.
it is because it is in their ordinary course of business, we can say that they are not required to have this disclosure, or else this disclosure will go on and will never end, right?
Correct, correct. That is the reason that they are exempted.
Yeah, because the bank's business is only on lending and borrowing. It is the
Correct.
ordinary course of the business. That is why this particular clause is appearing.
Yes.
Yeah.
Sir, but I just have a quick thought here. While I think it's a regular business for the banks, and so it's not expected that they capture all these entries. But is it not essential that if there are any lending borrowings with the related parties, they should still be captured? Because we have had a classic example of ICICI Bank. So is it not really something that SEBI has maybe overlooked, or SEBI should keep that in mind?
See that, this is not the only reporting, Vallari, that the reporting under the accounting disclosure, the annual report, anyway, you are going to give that thing, right? And similarly, as far as your compliances are concerned, that is also, this is only a part of reporting on half-yearly basis. So it was, felt like in case of banks, it is not required. Otherwise, what will happen is too much of data will be dumped on the stock exchanges as well as on the stakeholders. Then what will happen? It will not communicate any proper message as such. That might be the reason why the banks were exempted from this particular disclosure.
And also, RBI is a regulatory authority for all their operation, and that is keeping a vigilant eye on that.
But only thing is, one more thing one has to remember is, if I am not wrong, NBFC companies are not exempted. It is only the banks which are exempted.
Correct.
And I am also, if I'm not wrong, NBFCs are not part of banks. Only payment banks may be considered as bank under the RBI regulation. So payment banks, if they are listed also, they don't need to report. But if NBFC companies which are listed, they are supposed to report whatever this lending, borrowing transactions are there to the related parties. Yes, Drishti, please go ahead.
Okay, so while we were discussing on the columns, we were at we discussed about the type of related party transaction. We went through the drop down that I mentioned over there, and how careful we need to be while addressing each of the point, because you cannot have a situation where you are reporting something and your accounts team is reporting. So that is why you always need to be aligned. Then we saw about the next column, which talks about the value of transaction that was approved by audit committee, because it could have been coming from your omnibus approval, and if not omnibus approval, you must have taken approval during the year from your audit committee. And what is the value of transaction against the approval amount? In the next column, we can see that in case monies are due to either party as a result of the transaction, then you need to mention the opening and the closing balance. Then you need to provide additional disclosures in case the transactions are relating to loan, intercorporate deposit, or advance or investments. So these are something additionally that you have to look upon, and additionally you have to keep your finance team very much aligned that, hey, this is something that you need to provide us at any cost.
One more thing also is that in my previous question, I'm elaborating it a bit further. You have said that listed entity related party transactions with, say, JED is a listed entity, B is its subsidiary. Now I am elaborating that there are, say, for example, another 25 companies, B to JED are there. all are subsidiaries of the listed entity A.
Correct.
Okay, suppose you exclude Z, because Z is the related party. All are subsidiaries. Now, all the subsidiaries and the listed entity are dealing with that related party Z, right? So all are purchasing. So though they are purchasing, but you have to show the transactions separately.
Correct.
Listed entity, dispatch, B, C, D, E, F, like that. You have to go on doing that. Whatever the subsidiaries are there, you have to mention their names.
Correct.
And you have to show the transactions separately.
Correct.
If it is purchase transactions separately, sale transactions separately, again, services, availing, rendering, blah, blah, blah. Also, it is going to be a big exercise. So as you rightly said that, there should be a complete coordination between the accounts as well as the secretarial department.
Yeah, because we only come in picture when there is reporting required, when audit committee is required to be reported. We cannot have a say on whether this transaction can happen or not, or if it is already happened. This is something, a big soup for the finance and the secretarial team. Hence, please try and have as much sensitization program as you can with not just your accounts team, but with your subsidiary accounts team, especially if they are not listed, because for them, LODR is something very new. They are aware with the Companies Act provision, but LODR is something very new. And with this change in related party transaction, they need to be more mindful. They need to be mindful on identification of related party. They need to be mindful before entering into related party. They need to be mindful after entering into related party also.
Suppose in a quarter, there are no transactions at all. But I have taken the omnibus approval. Okay. And April to June quarter, we are reporting, April to September quarter, we are reporting to the stock exchanges. In this first half year, there is virtually no transaction. I think if I am not wrong, but still I have to mention that what the approval I have taken.
Correct.
And against that, I have to say, as far as the transactions incurred during the half year is nil. Am I correct?
Yeah, you're right. That is what it is expected actually. If you have taken the approval for this, if the transaction happen, not happen, or less happen, you need to provide the explanation. That is it.
Yeah, exchanges always ask for nil reporting as well. Even if you have not done anything, you have to report that. You have to do the reporting. I can, link this with the filing that is required to be made under Regulation 57.4 and Regulation 57.5. That is relating to NCD, and you have to report the interest or the principal payment that is applicable for upcoming quarter and the interest and principal payment that was applicable for previous quarter. Even if you had no interest or no principal that was required to be paid, you have to make the reporting. Just mention nil, but do the reporting. Similarly,
just one more question. Now, since you have mentioned about this interest part, say, for example, in case of NBFC companies, okay, or even normal companies also, I have borrowed the money. The interest is accrued, but not due for payment. So I have made entry in my books of account that interest accrued, but not paid. Do I need to report?
According to me, yes, it should be reported.
Yeah, you need to report. You need to report.
Yeah,
because,
that's what I want to bring. Some finer points, that I mean, as far as reporting is concerned, when the interest is accrued and you made an entry in your books of account.
Yeah, because our double accounting entry is actually on the accrual basis, not on receipt basis. Correct. So naturally, you need to report. Yeah.
Once it has come in your books of accounts, you have to disclose.
Yeah.
Correct. So moving forward, in case
Drishti, just sorry to pause, but on this point, I think if you can just elaborate on the note 1 as well. Yeah. I think that's also quite important.
So note 1 states that the details of this format are required to be provided for all the transactions undertaken during the reporting period. However, opening and closing balance, including commitments to be disclosed for existing related party, even if there is no related party transaction during the reporting period. So this makes it very clear. Yeah. Correct. So coming.
Yeah, proceed.
Yeah, so coming back to the format, as we were discussing, that in case you have entered into transaction which is relating to loan, debt, or any kind of advance of or investment, then you need to ask for these additional disclosures also that needs to be reported in this particular format. Again, I'm focusing on that. Please keep this aligned with your accounts team, because it takes a hell lot of time in putting the data in XBRL. And even after putting the data, you are not 100% sure that you will be able to upload it, because in uploading also you face a lot of challenges. So be ready for everything. Keep all your teams aligned, because you have very limited time once your board meeting is over. Now, coming to the notes that they have mentioned, we discussed on the note 1. The note 2 is where transaction is undertaken between members of a consolidated entity, that is between a listed entity and its subsidiary, or between subsidiaries, that is the sister concerns. It may be reported once. Now, third point also we discussed that listed banks are not required to provide the disclosure. The fourth point is talking about what should be the period of reporting, with it, that is 30th September and 31st March. Point number 5 talks about type of related party transaction. So they have provided a drop down. They have provided some A to N points which you need to select while selecting any of the transaction. And each of the type of related party transaction with a single party shall be disclosed separately, and there should not be any clubbing or netting, as we had already discussed. However, if transaction with same counterparty of same type may be aggregated for the reporting period, as we saw that if I am buying a particular product, say product A from my related party in month of November, in month of December, then I can club it. But if I'm buying product A from a related party in month of November, and I'm buying product B from a related party in month of December, then I cannot club it, because while taking the omnibus approval for product A or approval for say for product A, the terms and conditions might be different from product B. Hence, you cannot club them. They have further elaborated this point 5 there, where they are stating that, for instance, sale transaction with same party may be aggregated for reporting period, and purchase may also be disclosed in the similar manner. But make sure that the products are different or the services that you're taking are different. And in fact, terms and conditions based on which you have entered into the transaction are also same and not different. Then only you can club them. Coming to point 6, in case of multi-year related party transaction, the aggregate value of such related party transaction are approved by audit committee and shall be disclosed in column of value of transactions approved by audit committee. The value of related party transaction undertaken in reporting period shall be reported. That means you have to the amount of approval amount vis-a-vis the transaction amount. When we talk about the additional disclosures that are required to be taken for debt, advances, and note deposits or intercorporate loans of that sort, the word cost there means the cost of borrowed funds for the listed entities. And we are mentioning the PAN while reporting to the exchanges, but they always make sure that the PANs are not disclosed on the stock exchanges website. So in a similar fashion, we have to be very mindful while we are publishing the same disclosure on our website. We delete the PAN column, just like we do for corporate governance report filing. While filing the CG report on a quarterly basis, we mention the PAN of director. But while uploading the report on our website, we have to make sure that the PANs are not getting reflected, because that is the personal data of the director that cannot be displayed on a public domain, right? Coming to the last point, transactions such as acceptance of fixed deposits by bank or NBFC undertaken with related party at terms uniformly applicable offered to all shareholder public shall also be reported. So basically everything needs to be reported. All the transaction for which entry is being happening in the books of your accounts, those are to be reported. Entry happening in books of accounts of your subsidiary are also to be reported. So basically, if we also talk about that circular only November 22, 2021, it also talks about certain points, certain disclosure requirement which are to be placed before the audit committee before taking the prior approval for entering into transaction. So what we have done over here is we have prepared a table comparing the points which are to be placed before audit committee and data points which are to be mentioned in XBRL. So after comparing that, we can get all the relevant data in one go, and we don't have to, go back to our accounts team or your finance team to get data for same transaction again and again. So while placing the details before audit committee for prior approval, we need to mention the name of the entity that is entering into transaction. Either it's us or it's a subsidiary. Then what is the relationship with the related party? It could be anything. It could be your sister subsidiary or your other subsidiary. They can be any relationship. But again, be mindful that if you are mentioning certain relationship, your accounts team should be aligned that they are also making a note accordingly. There should not be any kind of deviation between both. After that, you have to mention the type, material terms and particulars of proposed transaction, tenure of proposed transaction, then value of the proposed transaction. Then you have to also mention that the transaction that you are entering into, what is the percentage of annual consolidated turnover of the listed entity in immediately preceding year. Now there are certain changes in this aspect also. We'll come to that. In XBRL mode, you have to mention name, PAN of the listed entity or its subsidiary, the counterparty's name and PAN, type of transaction for which they have given a drop-down menu, details of other related party transaction, value which is approved by audit committee, remarks if the audit committee has any remarks given by audit committee. Then in case the transaction relates to loan, intercorporate deposits, advance or investment, then there are additional points which are to be required to be placed before audit committee. And in the similar fashion, it is required to be placed, not placed per se, to be put in the XBRL. Now, point number 11 is something very, very important, because you need to justify why this related party transaction that you're proposing to audit committee is in the interest of listed entity. So make sure that the justification that you're providing to the audit committee, the chairperson of audit committee, is very valid. Now, coming to the next point, you have to place a valuation report or a report from any external party that can be relied on by audit committee while giving approval to the transaction. There is one more very important aspect that you have to keep in mind while placing any related party transaction for approval before audit committee, and that is only the independent directors can, vote and participate in that particular approval item. No non-independent director can participate. So just make sure that while you are conducting the meeting, you speak up that, okay, this is a transaction which relates to related party. So only independent directors have a say in that. The next point that you have to place before audit committee is percentage of counterparties' annual consolidated turnover that is represented by value of proposed related party on a voluntary basis. So these are some of the points that you have to keep in mind while preparing a note for audit committee for taking any related party transaction to them. Now, this was all about the disclosure.
Just before you go further to MOC 2, suppose there are in that the regulation 23 amendment, there are certain transactions which are exempted, right? Like dividend, bonus shares, buyback, and there are several other transactions are there. So these exempted transactions, whether they are to be reported or they are not required to be reported.
They are to be reported. You don't need approval for them, but the reporting is required. Reporting is required. Correct.
So before you go further, Drishti, I also request you, these are all the theoretical part, okay? Now, what exactly in practical, in your organization, whether you are Vallari, what is the role of Secretarial department and what is the role of finance department? whatever, suppose the information they are furnishing to you, you just are, is the secretarial department, pardon my saying, a postman kind of a job, I have to just forward it, or I need a role to play? Can you please explain that?
Madam, would you like to take that question?
Yeah, sure. I think it's quite relevant for us. And one point which Drishti also highlighted is a lot of alignment between the secretarial function and the finance function. Now, while the accounting aspect is taken care by the finance team, so we wouldn't know how exactly the entries are captured in the books of accounts. What is important is how we help the finance team, one, in identifying the correct related parties, then identifying the nature of transactions, and when the transactions are being placed before the audit committee, the entire alignment, the reason where we captured these 2 points, that the data which we need to report subsequently and also which is required to be placed before the audit committee, all that alignment is done with the finance team. So it is not just the data we receive and we simply file it with the exchanges, but we align between what we have placed with the audit committee and vis-a-vis what we are now reporting with the exchanges. Also, we do a counter check or a cross check between the specific transactions where we have concerns, because there are some routine transactions which usually happen between the company and subsidiary, or let's say a company and a related party within the group, and they are of omnibus nature, they are of routine transaction. We may not look into that particularly at the time of reporting, but there are one-off transactions, or maybe particularly the transactions on loans, intercorporate deposits, advances are something where we get into depth, understand the way it has been captured in the audit committee approval, the way we have documentation with it, so that it's all taken care from every aspect. And with the accounting entries, that's also a reporting which is done. Now, one point which you had also raised was if there is any interest due accrued, whether the reporting is required or not. So those kind of intricacies also we check from our side, that it's not missed out, that just because the transaction already has not happened, the accounts team has missed certain points. Now, obviously, there is accrual of interest or any such transactions which are carried out on accrual basis, there must be an entry in the books of accounts, but there is a counter check also from secretarial side that we put on such kind of transactions. And obviously, because there is a specific template now provided. Now, earlier, though SEBI did not provide a specific format, the language was the disclosure will be in the format as prescribed under accounting standards. So wherever there were specific templates provided under accounting standards, the same was submitted with the exchanges. Now, since there is a particular format, we are all discussing and understanding as to how the disclosures are completely in alignment with the governance process, in alignment with the approvals which have been sought. So this is what we can add.
Thanks very much, Vallari. In fact, you see what I provoked you to answer this particular question is only for one reason, that I have seen several company secretaries, they have averse to figures. They say that, in fact, several times when I interact with company secretaries, most of the times, some of the company secretaries at least, they say that, sir, it is a responsibility of the accounts department. I don't know anything about accounts. How can I be responsible like that and all? See, even in the financial statements, when they're preparing it also, you cannot just leave it to the accounts people, everything. Because the accounts are to be prepared under the provisions of Companies Act. You have to get involved into that and understand the things wherever it is required and all. And at the end of the day, please remember, you are the compliance officer. You are the person who is supposed to ensure that whether the requirements under the Companies Act or the requirements under the listing regulations are complied with. You are answerable tomorrow. You cannot say by that, look, my accounts people have done it, I don't know anything at all. You cannot simply wash off your hands. Any company secretary who is a participant of this particular webinar, if they are having this kind of a remote idea of that, it is the responsibility of the accounts department. Please read, check about that. You are the compliance officer. You are fully responsible. You are fully answerable for that. You cannot simply wash off your hands that I am not responsible for that. I want to create the emphasis as far as this particular understanding of the company secretaries are concerned.
Sudhakar, I fully agree with you on this aspect. One thing is that as far as the figures are concerned, that means numbers are concerned, I really do not know. The numbers are concerned. The numbers responsibility definitely goes to the finance department as well as the auditor's responsibility, because they have the check and balances by going to the trial balance, tallying the various contra account, etc. But when it comes to the compliances, when it comes to the disclosure part of it, everything what is required to be disclosed is actually disclosed. Everything what is required to be complied with, that is complied, is there. That is definitely the company secretary is responsible.
But
I
in
agree
fact,
with you.
in fact, I say this thing in a different way. I used to say always is that integrity of the financials are concerned, it is a responsibility of accounts department.
Correct, you're right.
Integrity of the compliances are concerned, it is or integrity of the presentation is concerned, it is the responsibility of the company secretary.
Absolutely correct. I agree with you, 100%. You said it.
Absolutely
Yeah, please go
right,
ahead,
sir.
Drishti.
And
Yeah,
yes.
sorry, Vallari, you are saying something.
No, I was saying the same thing, that essentially as company secretaries, we have to drive and ensure the appropriate compliances. While of course, yes, the finance team has to be responsible for the numbers, but ensuring that there is a proper format being ensured, the alignment between what we report to the audit committee vis-a-vis to the exchanges, and internally the governance practices is with the company secretary.
Sudhakar, to be very frank with you, not today, long time back, maybe 25 years back or something like that, when we moved to unlisted company to the listed company, earlier, the entire, notes, accounts, etc. used to be just copied and put in the next. I said, no, this is not correct. Now that we are the listed company, we need to go through each and everything. All the requirements are covered. We have spent almost about a month's time, much before releasing the report. We have rewritten the entire accounting standard with a reference to, what are the system, what is the thing, what is the procedure, what is followed. There are many issues which is actually about relating, the accounting standard, how we treat dividend received. In fact, there is a dividend received. We were not receiving the dividend at all, but there was no mention in the procedural aspects. Then I said, no, when we talk about the dividend, it is not only paid, it is also to be received. Today, we are not receiving. We may receive it tomorrow. So what should be the policy of the company? We should mention. We have rewritten, sitting with the finance person, company secretary, together, we have rewritten the entire notes to financial statements. So I think that the disclosure requirement is concerned, as you rightly say, integrity of the reporting compliances is definitely rest with the company secretary.
See, similarly, similarly in the good olden days, the secretarial colleagues used to say that "Hamara koi sunta nahi hai," that nobody listens to us and all those things. I am very sure, I am confident, that post Companies Act 2013 and SEBI listing regulations 2015, definitely the secretarial department has its say on in the organization, and I'm sure that 90% of the times, at least the accounts definitely listen to secretarial, and they are consulting them also, because they know the responsibility. Tomorrow, God forbids, if anything goes wrong, it is not the only company secretary who is responsible, it is the CFO also will be held responsible for that. So because of this thing, the only thing is how best the company secretary organize these interfunctional meetings. In fact, in Reliance, we used to have monthly meetings between the accounts and secretarial colleagues, so that just if there is no issue to discuss, just have a cup of tea and then disperse. But if you have issues, any kind of changes, any amendments, anything comes, how to gear up for that, how to ensure the presentation. For example, this also, though it is 6 monthly, but on the day when you are publishing your financials, you have to file this report now in this particular financial year onwards. So how you will do that? So you cannot just prepare at the end of the day. What you may have to do it maybe a monthly basis or a bi-monthly basis, you have to prepare that, and so that the checking will be there. First 5 months you can prepare it, then the check can go on. And the last 6 months figures you will add it. So that means what I'm trying to say is that the accuracy is concerned, at least in the beginning, that the interaction between secretarial and finance and accounts have to be more. And over a period of time, when it fall into the routine, then of course that kind of a focus may not be required. But initial stages, certainly it requires. And I'm sure that, this particular time, this is a very sensitive reporting which is going to the stock exchanges. This particular 31st March 2023 is concerned. Yeah. Yes, Drishti, please go ahead.
And just to add over that, since this circular came into force, we conducted a lot of sensitization programs. We used to personally go and meet the accounts team, not just of our company, but of subsidiary. We used to make them understand that, okay, this is the requirement. And if you don't follow, there are going to be penal action against the company and the officers. And I can proudly say that now every time they want to enter into transaction, they call us, they email us that, okay, there is some transaction. What is the requirement? Can you tell us? Can you guide us? After that only we'll enter into the transaction. So it took us a lot of time to reach there, but we are reaching there, and hopefully we will be able to, say that, okay, we are now set up, a process is set up and everyone is following that. So long way to go, but I would urge everyone over here to go and talk to your accounts team, make them understand, make them explain that what can happen if you don't do this.
In fact, I used to say in my language that you have to create a hype of compliance. Agar nahi karoge, non-compliance, bhoot aa jayega. You have to create that kind of an atmosphere or environment. Bhaiya, galti karoge, bhoot aa jayega. और भूत खा जाएगा तुम्हें. So then what will happen is people who are scared of ghosts, they will certainly come because you are the exorcist kind of thing.
Yeah.
Okay. Chalo, go ahead.
Yes. So as we were talking about the disclosure requirement under LODR regulation, we can now move towards the disclosure requirement under Companies Act. So this AOC2, which forms part of the board report, under which you have to, make the disclosures of a related party transaction. But again, we'll be going into the details of AOC2 in upcoming slides. This is just the heading which we can, discuss first, and then we can move forward. So the heading of AOC2 clearly states that the disclosure of particular of contracts or arrangements that are entered into by company with its related party referred in section 188 subsection 1. So this particular section has jotted down these particular points which state that, okay, if you're entering into these transactions, these are known as related party transactions and you have to report, but there are some catches over here which we will be seeing in the upcoming slides. So you see AOC2 is bifurcated into two parts, part A and part B. Part A talks about the contracts or arrangement which are not at arm's length basis. For those only you have to make these particular reportings. In the format, you have to mention the name, what was the nature, what was the duration, what was the terms, and justify how you entered into this contract, how it was in interest of the listed entity. Did you take a board approval? Okay. If you took, what was the date of the approval? Were there any advances paid? What was the date of special resolution? So all these things part of the AOC2 if the transactions are not at arm's length basis. Now, there might be some transactions which are at arm's length basis, but material in nature. Then only you have to report it in AOC2. Now, the term material is not defined anywhere in Companies Act. So we can consider the transactions that are mentioned under Rule 15 as material transaction. And if you are, triggering any of the point, then the same is required to be mentioned in part B of AOC2. So we can quickly go through the transactions that are mentioned over here. In case you are selling, purchasing or supply any goods or material which are amounting 10% or more of the turnover. In case you're selling, disposing or buying of property and the amount is 10% or more of net worth of the company. Or you're leasing a property amounting to 10% or more of the turnover of the company. Then after, if you're availing or rendering any services which is amounting to 10% or more of the company. So in Companies that they have clearly laid down the trigger points. If you're triggering this, if you're triggering that, then you have to make the reporting, unlike LODR. So for a easier reference and for better understanding of all the participants, we have also prepared a comparison file that if you're making a disclosure under LODR versus disclosure under AOC2.
Just Drishti, before you go for the comparison, can you please go back to the previous two slides?
Yeah.
Yeah, here. See, I don't know why, despite the fact that right from 2015 onwards, this AOC2 was to be attached to the board's report. But still, several RPT, whenever we discuss in the conferences or webinars and all, this question, AOC2 clarity, I don't know why it is not there still.
Yes.
Just go back, I think one more slide before. Next one. Yeah. Yeah. So here there are two parts are there, part A and part B. Several times that question comes, what I have to show in part A and what I have to show in part B. It is clearly there that details of material contracts or arrangements or transactions at arm's length basis. I think, where is the other one? This one. So details of contracts or arrangements or transaction not at arm's length basis. Ordinary course has nothing to do with AOC2. What is concerned with AOC2 is arm's length basis only. So when the transactions are not at arm's length basis, you have to make the transactions in the 189 register.
Correct.
Am I correct?
Yes.
So for the simple understanding, what you can keep in your mind is whatever the entries you are making in 189 register, those transactions are to be reflected here. That is part A is concerned. So there will not be any confusion. Whatever the entries you are making, what entries you have to make in 189 register, despite the fact I told again, even though it is exempted under ordinary course of business arm's length, but still 189 register entry is mandatory. Number two is that especially when it is not at arm's length basis, you have to make the entries in 189 register. Then comes part B. Next slide. Part B says that those transactions, though they are on arm's length basis only, but still if they are material contracts, then you have to report in part B is concerned. Now, which are these transactions? As Drishti has rightly mentioned, materiality has not been defined under the Companies Act. So we are taking that rule 15 threshold limits for the purpose of this. That means what? Wherever you are going to the shareholders to obtain their approval, those transactions are to be reflected here. So this is the simple way of keeping in your mind when you are preparing the AOC2. Not much interpretation is required. Whatever the transactions you are going to the shareholders to obtain their approval, reflect in part B, and whatever the entries you are making in 189 register, put it in part A.
Correct. Very well summarized by Sudhakar, sir, because the clarity is not there in Companies Act at the moment while reporting these. So as we were discussing for
just sorry. Just one more final point. I'm sure that when you are bringing that comparison, you might be bringing that also, but still, before it slips out of my mind, let me say that AOC2 is concerned. Not every transaction with related party you have to report under AOC2. Only those transactions which trigger section 188 compliances only have to report.
Correct.
Whereas regulation 23 reporting is concerned, that has nothing to do with 188. Every transaction with the related parties are to be reported in the regulation 23 report, 23/9 reporting is concerned. Yeah, go ahead, Drishti.
Correct. So we have made a comparison chart of the filing that is required under LODR and the filing that is required under Companies Act. So LODR filing is governed, as sir said, under by regulation 23/9. AOC2 is governed by 134(3)(h). Now the transactions that are covered while reporting under LODR transactions are all related party transaction. All means everything. Your subsidiary, transactions with your related party, your subsidiary's related party, or any unrelated party also which is giving benefit to your or your subsidiary's related party. So this is something that needs to be looked at very carefully. While in AOC2, as sir said, that not all related party transactions, but if they are triggering section 188, then you need to report it. The submission requirement for LODR is half-yearly basis on the date of publication of financial results. For AOC2, since it is part of board's report, it is annual. Now, LODR submission is required with the exchanges, and AOC2 is required to be filed with AOC with ROC. But since AOC2 forms part of the board's report, which forms part of your annual report, which in any ways is going to be filed with the exchanges, you can say that it is required to be filed with both the parties. Now, RPT disclosure does not form part of any of the document which is required to be filed with the exchanges, but AOC2 forms part of the board's report. RPT disclosure is not required to be signed or approved by any of the authority, but as a better corporate governance, you can get a noting or approval from your audit committee and approval from your chief financial officer or the finance head. And AOC2, since it is part of board's report, it is signed by person who is signing the board's report. Now, RPT disclosures are compulsorily required to be published on company's website. There is no say that, okay, I forgot, or okay, I will do it. No, once it is submitted with the exchanges, you have to publish it in your website, because now exchanges are, looking at the websites also very meticulously. As all my friends over here must be aware about the recent XBRL file that was required to be submitted with the exchanges, stating that, okay, this policy is reflected on this page, this particular document is reflected on this page. So just be mindful that they are looking even at your website. In fact, all of you must be aware that NSE came out with a circular also, where they were even mentioning that this is the form in which you have to maintain your website. SEBI has not come out with any circular as of now, but NSE did came up with such circular. So this is also something that you must keep in mind. Once filed, upload it on your website. Now we talked about all the reporting aspects under LODR regulation and under Companies Act. So reporting aspect is done. Now, as Sir was already stating that we need to maintain a register as well. So that register maintenance comes from Rule 16, and it is MBP 4, under which we have to maintain this register, and we have to make entries of all the transactions which are triggering Section 188. Now, as Bala sir was telling us about initially, that under NDAS also you need to require to disclose your related party transactions in your financial statement. So we have took screenshots of some of the financial statements over here, where they are mentioning name of related party in this section and the transactions that they have entered into. So if you can see that, you can see dash on some of the points. That means even if you have not entered into transaction, you have to mention. There is no say like, okay, if I not entered in previous year, then why is it required to be mentioned? No, it's not like that. It's your related party, disclose it. End of discussion over there. Then there is one more financial statement that you have, we have taken ahead, where they are mentioning list of all the related party and details of all the transactions that they have entered over here. So you can see over here that with this particular company, they didn't enter into any transaction for 31st March 2022, but since they had entered into a transaction with them for the period ending on 31st March 2021, they have mentioned it. So it's not like, okay, I have entered into transactions with them 2 years ago. Why should I report it? No, you have to report it because it is written in the law. There is no say in that. If there is a format, you need to follow that format. Now, there are penal provisions, something that everybody is scared of as a company secretary and a compliance officer. In case you are not complying with the provisions of Regulation 23, Regulation 9, the penalty that is imposed by the exchanges or by the SEBI is fine of ₹5,000 per day till the time of rectification of non-compliance to the satisfaction of the stock exchange. You cannot say that, okay, I filed it after 7 days, so I should just pay 35,000 and get over with it. No. Is your exchange satisfied with your filing? They are not satisfied. Okay, keep on paying till they are satisfied, or till the time the scripts of listed entity is suspended from the trading for non-compliance. We must have seen that sometimes it does happen that, companies don't make the filing and the scripts are moved to the suspended scripts. So it can happen that, okay, I have made the filing, exchange is taking 10 days to bring it back to my trading. So you have to pay the fine for additional 10 days also. So this is under LODR. Under Companies Act, if you are not in compliance with Regulation 134, in case you missed attaching AOC2 in your board report, then a company is liable for a penalty of 3 lakhs and every officer is liable for a penalty of ₹50,000. In case you are in not compliance with Section 188, your employees or your directors are entering into any related party transaction, then the company can recover the cost. And in case of listed company, the penalty is rupees 25 lakhs. And in case of other companies, the penalty is of rupees 5 lakh rupees. So in this particular presentation, we discussed about the disclosure requirement under LODR, the format that is prescribed by SEBI via circular dated November 22, 2021. We talked about when is the filing required, what are the important sensitization activities that you need to conduct so that all the filings are done in time and everything is complied to avoid this particular slide. So if you want to avoid this slide, make sure that you are in compliance with all the previous slides. So if anyone has questions, I think they can post it, right, sir?
Yeah.
Excellent, Drishti. I must say that really at such a young age, with such kind of confidence and conviction, you have made this presentation. It's really commendable. And credit goes not only to you, but to some extent to Vallari also, because she is grooming you very well.
Yes.
And I place on record my appreciation. In fact, Noki, that I mean, whenever these kind of things happens, the people, senior people like me, Bala, Dipti, will be very happy to see that the profession is in safe hands. That much I can say today. Thank you very much.
Thank you everyone for this wonderful opportunity, and special thanks to Vallari madam.
Drishti,
Yes.
you put it very nicely. Not only that, very elucidately, you are able to explain.
Yes.
That is very important. I definitely liked it. It is very good job you have done. Wonderful thing.
Thank you.
My great appreciation to you.
Thank you so much, sir.
I don't think there is any questions are there actually, because questions some here and there something was there which I did answer, and there is no. I don't see any other questions. If people do have any question, they can ask.
Again, the same thing. When there is no question, the credit goes to the speaker.
Yeah, that is right. That means, you know, what she has explained, everything is fully understood by the people. That's what it means.
But there is some questions actually.
Yeah,
I
no,
can
no,
see.
no. 1 minute. Now one question is posted. Because earlier, whatever is there, I've been replying it. Because that was relating to, you know, disclosure and other things and all with this accounting standard. And now let us see, there is lastly, there is one has come. As our company has one shareholder holding less than 5% shareholding, we have dealership agreement with them. Do we need to any RPT compliances on it? Please explain.
Should I try that, sir?
Yeah, please go ahead.
Please.
Yeah, all right. Yes, I think two aspects to look at it. One is it a listed entity for which the shareholder is being considered? If then 10% is the threshold, so 5% will not qualify the dealer to be a related party in this case. However, if there is any other deal, any other relation, in case if the company is not a listed company, or even if it's a listed company, the dealer is a related party in other aspects despite the shareholding, then obviously you will have to comply with it. So that's, I think, the answer. With the facts given, if you're only referring to shareholding, you'll have to understand whether the entity that is entering into dealership, is it a listed entity? And if yes, also 5% is not the threshold to be considered.
Our auditors required related parties as per the Ind AS 24 and the MGT 7 related party disclosure to be the same. Please suggest, as Ind AS 24 and the Companies Act provisions are having a thin line of difference.
Sir, I'm not sure about the correlation of MGT 7.
That is what I am also thinking. I do not know really what the questionnaire is asking.
Hello.
Yeah, are you there?
Sir,
Because,
yes, sir. Yes, sir. Yeah.
Yeah.
So what has happened in MGT 7, there is a section 3 which asked us to list down the subsidiaries and our joint the things, okay, associates. So our auditors want that IND AS 24, which we the list which we disclose in the balance sheet, that same list should be copy pasted in the MGT 7. Now, there are few technical difficulties that LLP company is not able to be included in this. Even partnership firms are not included. Again, IND AS, if you go 24 and if you see the Companies Act, there are certain difference wherein they say with respect to the agreements and what you say, the related party how related party gets attracted with respect to that?
The MDT7, what is the exact wording? Mehta, can you please, because I don't recollect that and I don't
Yes.
have the
So
book
if
right
I
away with
can,
me.
right,
Yeah.
sir, if I can answer that.
Yes,
Yeah,
ma'am.
please go ahead.
Yes, ma'am.
Yeah,
Yeah.
sure.
So Mita, I think what your auditors are referring is not appropriate because reporting for related parties as per Ind AS 24, identifying related parties as per Ind AS 24 is a different purpose, whereas listing
Yes.
out your subsidiaries, JVs, associates in MGT7 as per Companies Act has a different purpose. So they cannot
Yes.
say that the entities which are captured as related parties in Ind AS should also be reflected in MGT7 in your list of subsidiaries or associates. Because
Agree.
just to clarify one point, now as associate, Companies Act definition is certainly specific about 20% shareholding. Whereas for accounting standards, there is also an explanation that in case there is association with control or with oversight of the
Yes,
management,
yes,
only
yes,
then it will have to be
yes, ma'am.
captured. So there could be entities which are which is where you may be holding more than 20%, but that may be for a statutory reason, and you are not effectively having any control on the management policies or the decision making of that companies. Then you can qualify those entities not to be associates for specifically your related party transaction purposes. So these are few nitty-gritties the auditors will have to understand and align. You really
Yes.
cannot force the list of Ind AS into your MGT7. Both have a
Agree,
different legal base and a different reporting purpose.
Yes, thank you very much. You got it right. Yeah.
Yeah.
Thanks, everybody. Good session.
If the company is taking a omnibus approval from the audit committee, and if it is exceeding the threshold limit, transaction proposed to be executed or it may not be executed, then SP is required when it will going to exceed the threshold limits. I think
So what is SP?
Yeah. Hello, Dilip, are you there? I think he's not there. I think so. I'm also not able to know what is
I
this.
don't know what is SP. What does SP mean? Sorry.
I think.
Special permission, maybe?
SP.
We could be
Don't
talking
know.
about special because he's writing if company is taking omnibus approval from audit committee,
Yeah.
and if it exceeds the threshold limit, transaction proposed to be executed or may be executed, then SP is required when it will going to exceed the threshold. So
In case if he's referring to again going to the audit committee
Yes.
for prior approval, in case there is any threshold being exceeded, yes, you will have to.
Yeah, if the
But
limit is
again,
under which,
there is there can be a debate where people can say that while taking the approval from audit committee, I can say that the transaction could be more than what is 10% more than what I have taken approval. For example, I have taken approval of say 1 lakh, and the transaction happened for 1,10,000. So can in the approval note to itself, or while taking the approval from audit committee, we can say that the range of the transaction could be 1 lakh plus leeway of 10%. Will that be?
See, if you are saying about material modification and only if the audit committee is convinced, then it could probably be permitted. Sudhakar sir, if you want to add any point on this
What
material
is that?
modification.
I'm not able to catch that exactly. What is that?
So for example,
So what we are trying to understand the question.
no,
Yeah, go ahead, Drishti.
yeah. So while we were just discussing if we are going to audit committee for taking approval for any related party transaction. I'm not sure about the value of transaction, but can I take an approval stating that the value of transaction would be 1 crore plus 10% increase? Because I'm not sure whether at the time of
Yeah, why not? Absolutely.
So
Absolutely.
can we mention that particular percentage, and if yes, should it come from our materiality policy?
You can.
that you can actually do.
See, one thing is there. See,
saying,
only caution there is that when you are, see, you can take a band when that in the omnibus approval also, when you are not very clear, up to a limit of so and so. Okay, suppose for example, you say 100 crores plus 10 crore plus 10% of that. That is one way of looking at it. Another way of looking at it is straight away you say 110 crores. Why you want to fix up a 10% limit or something like that? Because nobody is going to say that there is a stipulated limit is to be there. Only thing what you need to ensure is that it should not, when you are taking the omnibus approval, it should not cross the threshold limit.
Correct, correct.
That is the only thing you have to keep in mind. Up to the within the threshold limit, you can take audit committee approval on this basis. But the only thing I have cautioned in the last webinar was omnibus approval. When you are taking it, say for example, you have given an approval for 1,000 crores of purchases from one particular party. At the end of the year, you have ended up only purchasing some 10 crores vis-a-vis 1,000 crores. That looks ridiculous. That means what? The audit committee has not did its job properly. Without going into the nitty-gritties, it has just given a blanket approval up to 1,000 crores. And that's why what we do in Reliance was that when the audit committee review used to take place, whether the auditors ask a question or not, but as an employee of the company, as a leader, I used to ask them the question, by you are taking an approval for 1,000 crores. In the first quarter, you have not even utilized a single rupee. Are you going to utilize it in the remaining 3 quarters or not? Then second quarter, again, you have to see that. Third quarter, then because if you are not this thing, you have to reduce the limits. We can reduce the limit also. Similarly, sometimes it may so happen, you have to also ask your accounts colleagues, by look, you have taken the approval for 1,000 crores. You are already, you availed it 950 crores and it's still 2 quarters to go. Do you need to enhance the limits? This is the right time for that because you require prior approval. Correct. They may say that, no, we have already finished the job. We are not going to have anything in the remaining 2 quarters. So we don't need any further limit. Good enough. Okay.
But sir, this is you're talking about when you're taking an omnibus approval.
Correct.
For example, This is not an omnibus approval. This is a
specific approval. You are talking about specific approvals.
Correct.
Yeah.
For example, if I want to buy some property from my related party and the property price can fluctuate a lot. So while taking the approval, can I mention a percentage amount or how it should
be?
You can always mention the plus minus percentage amount. If you are taking X amount, this X amount at the real time may be plus minus 10%. That you can mention, they can always give the approval.
But while going to the audit committee, I'll have a backup certificate that I would have been taken from a valuer that, okay, he's certifying, he's valuing. So in that certificate also, then he should mention that while you're taking it to audit committee, the approval should be X plus 10% or X should be 5%.
Not necessary. Say, for example, the valuation certificate may be, say, for example, 100 crores.
Correct.
But by the time you are actually going to close the deal,
correct,
for whatever the reasons it is, the cost may go up
correct,
by another 10%. So you can always explain to the audit committee, I need to have a leverage of another 10%. Instead of coming back to you, and you can take it. There is absolutely no problem.
Drishti, there is 2 things. When you take about the valuation is always on a particular date.
correct,
It is not based on the future date.
correct.
So the valuation person will have this valuation holds good as on today's date. That is it. So he will not mention anything more, less, etc. and all this thing. Because if we are talking about the future date, again, you will have to take another valuation. So valuer will not mention anything, the plus minus, etc. Valuation will be only a valuation.
Correct.
But when you are going to take an actual transaction, as Sudhakar puts it very clearly, it may be in a future date, circumstances prevail. So it may go up, it may come down. So that best estimate you can actually put with the things and you can take the approval from the audit committee. That is fine.
Okay.
Yeah. Many companies are obtaining approval of the shareholder in the AGM RPT, example for 22-23 onwards. But SEBI circular dated April 8, 22 state that approval shall be valid only for the 15 months or next AGM. Then in such a case, will the approval obtained in the company for financial year and onwards stand expired, and now how they will be required fresh approval?
No, so I think this one is also a practical one. If there is specific submission by SEBI that the validity of such resolutions will be only for 15 months or the AGM, then obviously yes, there will have to be a fresh approval sought. So I think the intent from governance point of view is also that the shareholders should not give a blanket and a long-term approval for material RPTs. They should be brought up to the shareholders at a frequent interval.
See, at the same point of time, in fact, you cannot give the approvals in perpetuity, but say, for example, if there is a long-term projects are there, so you may approve the project, the shareholders approval may be obtained, and in the resolution itself, you can mention it may take about 5 to 8 years of time, as far as execution is concerned. So in the approval itself, if you give all the details and then okay, as far as the project size is concerned, if you are getting it approved from the shareholders, because execution not necessarily you will complete. Say, for example, I am getting an approval and then I'm intending to complete within 1 year, but I'm not getting the licenses, I'm not getting the permissions. Do you think that I will go back to the shareholders again and again for the same transaction? Answer is not. Okay, so as far as what is the
mandated.
Pardon?
No, I'm just saying if SEBI has mandated, would it still be required then?
What is the SEBI's mandate? You meant to say that the validity is only for 15 months.
Yes, I think Drishti, if you can just check that circular once again.
Yeah.
How does it reflect? Yes, sir. I think you can clarify your point.
Yeah. See, I mean, I don't remember the circular as such, but if it is says like that, by that maximum validity is 15 months and all, you have to go back to the shareholders time and again. So, because why I'm saying this thing is, sometimes the projects, what's called as, by the time you close a project, it may be long-term projects are there, which may, suppose if I am awarding a contract to my related party and I'm going to the shareholders for an approval, by the time I conclude the contract, it may take 5 years time. Okay, or it may be a one-time project, or it may be a continuous project also. Suppose when there are continuous projects are there, in fact, I don't remember this particular circular, what you say 15 months time limit, I need to recheck that and then read it properly in contest, then only come to a conclusion. But it is fair that what is the objective of this is that I should not give undue benefit to the related parties, and the related party transact. Whenever the material related party is there, I have to go to the shareholders for the purpose. I'm giving all the details to them. Only thing is the execution part is concerned. That execution, suppose, for example, if I'm going for a construction of a atomic plant, okay, or say, for example, a refinery, I'm awarding the contract to some kind of a construction company, then that point of time, it may take about 3 to 5 years time. You meant to say I have to go back to the shareholders again and again. I really don't know that. Anyway, see that what I suggest is that I may not be able to read this here and clarify that. Okay, that doesn't go properly. Let me recheck that, and then in fact anyone is having this thing, they can write to us and I will clarify that. Okay. Yeah.
What is the basis of identifying a transaction under section 177 where we have a limit of 1 crore for ratification?
So this particular thing, this particular transaction, I have already clarified in the last webinar that 1 crore is by exception, it is not by default.
Correct.
Okay. That 1 crore, people not think I have a limit up to 1 crore rupees, I will get it ratified and all, because there is a non-compliance is already there. Ratification is only for the validity of the contract is concerned.
Yeah, we elaborately discussed in the last webinar.
Yes,
I think
yes.
Payment of the sitting fees should be ratified by the audit committee, or how to take omnibus approval for the same?
Sure, sir. I think omnibus approval can be taken because this is a amount which is prescribed as per statutory limit. Companies Act also prescribes the maximum limit. So you can specify that as per statutory limits, the sitting fees will be paid. And omnibus approval will be taken at the beginning of the year.
We need to ratify the reimbursement of the expenses paid to KMPs by audit committee.
So here also, sir, I think this can be captured through omnibus approval. All the salaries, payments, remuneration, including reimbursement, as per their employment contracts, because your KMPs, you will be essentially capturing the MD, CEO, CS, and CFO. So that can be captured through omnibus approval. So there should not be a ratification situation ideally.
In a private company, audit committee is voluntarily constituted. Company does not have a nomination remuneration committee. How should the process be fixing the remuneration of directors, since we need to take the omnibus approval from the audit committee for remuneration, but at the same time, audit committee, if we move to the audit committee on the first hand, audit committee says that giving a omnibus approval up to specified limit would be mean audit committee is defining the remuneration, which is not within the scope.
So I don't think there is any interpretation that because omnibus approval is given up to a certain limit, the remuneration is being fixed by audit committee. That certainly will be the role of board, since there is no NRC to recommend. The board will have to take into consideration the applicable factors and decide the remuneration. Audit committee will only limit the amount in terms of the scope of audit committee, because it's a related party transaction. Over to Sudhakar sir, if you want to add any finer elements.
Only thing here is that it is omnibus approval is only a window given to the audit committee. It is not mandatory you have to take omnibus approval. You can always take specific approvals also. Second thing is that if a private company constitute the audit committee voluntarily, you have to comply with whatever 177 provisions are there. There is no other option for you. If NRC is not there, it is not there. Okay? Because if I am not wrong, that for private companies, NRC even need not be constituted also. And NRC has no role to play in case of private companies. Whether if you voluntarily constitute, it is a different thing. Otherwise, it has no role to play at all.
Yeah, that is right. Actually, as you rightly say here, the audit committee voluntarily they are constituted, although voluntarily they are constituted, they will comply with all the regulations because they are constituted. That is one thing. Second thing is, I think as Vallari puts it, you need not take the omnibus approval. You can take the specific approval. If the relative of the CFO is providing the advisory services doing some audit in the company, except statutory audit, then such type of transaction will be covered under the RPT. And if yes, then whether we need to take only board approval or required to be mandated shareholders approval also.
You see, again, the same thing,
I think, this is fairly
see,
simple.
Vallari, 1 minute. I have actually clarified it in the last webinars also, that you have to understand the concepts. You can give different permutations, combinations like this. You can give n number of things and you can ask the questions in this, in the webinars. Whatever the answer you are giving it is a half-baked answer only, because the information, what you are thinking that you are giving it, it might not be correctly being given. And we are understanding something else. We give some other answer to you and you will take it as a gospel truth. That is not correct. So better you have to understand that, as I have repeatedly saying in the webinars, that is it a related party? Is it a related party transaction? Because there is no ambiguity as far as Companies Act is concerned. There is absolutely no ambiguity. As far as Regulation 23 amendments are concerned, there was some ambiguity initially, but now it is absolutely, there is no ambiguity at all. It is crystal clear as far as the compliances are concerned. You have to sit properly and understand that, is it my related party? Is it a related party transaction? Is there any exemption? Am I exempted? If not, I have to comply with. That's it. And you can make a number of permutations, combinations of like this. This is not, it's such a lengthy questions, and if they are there, because the moment Bala sir is reading something, I am understanding something else, answering something else, the person who is receiving it is something else. There will be so many communication barriers will be there. So that is not the right thing. Only thing is concept clarity is very important. That is what is intended in these kind of webinars. If any kind of ambiguities are there, that ambiguity you can discuss, but not the questions pertaining to that particular person or to that particular company. That is not the correct way of doing it. That's what I look at it.
Right.
Yes, sir. And they have either mentioned no amount or NA in the value of the transaction approved by the audit committee, especially in case of the remuneration and the director sitting fees. Any specific reason?
So I think, as we have been explaining, the remuneration is one which cannot be predetermined always. Also, it can be within the statutory limits. So the prior approval of the audit committee, omnibus approval, could be to say that the remuneration will be within the statutory limits or as approved by the shareholders, but the amount may not be specified. That would be the reason that approval by audit committee would be in place while the amount wouldn't be specified. The transactions, however, during that period will have to be captured.
I think that's all the questions. I read out everything, I think. So nothing else is there, I think. Yeah.
So all the questions are over, then I think we can end the session.
Yeah.
It was really wonderful session with a lot of discussion and then lot of queries. We thought that no queries, but there were a lot of queries. Thanks participants. Thanks Vallari for your contribution. Thanks the presenter, Sudhakar, of course our Bala and all the participants. Thanks Drishti for wonderful presentation. Thanks Vallari. Thanks everyone. Thank you. And with this we are closing this related party series. And from next week onward, we are starting insider trading.
Thanks a lot. Thanks a lot. Thank you, Sudhakar. Thank you, Vallari. Thank you, Drishti. Excellent presentations.
Thank you.
Yes, excellent.
I can say 100%. It is a continuous addition of the value, whatever is happening in the current and other things. And definitely not many nitty-gritties actually coming out. How do we approach? How do we deal with? How do we look into the things? There are a lot of things, learning experience is there. It's a great experience. Sudhakar, my special thanks to you. Vallari, my special thanks to sharing your practical experiences, what you do in your organization, especially for Drishti, sharing how the way she is actually going through, what are the SOPs are in place, etc. and all things. Thanks a lot. Thank you so much.
Thank you.
Thank you. Thank you very much.
Have a good weekend.
Yes.
Thank you.
Thank you.
And happy
Thank
Akshay
you.
Tritiya to all.
Yeah, same to you and everyone.
Happy Akshay Tritiya. I can say you can buy a lot of gold.
Thank you so much. Thanks everyone. Bye-bye.
Thank you.